Okay, it's the 22nd of Jan. It's a Wednesday. Yeah, we're gonna get to the charts in a second. Just give me a few minutes. Uh, yeah. Okay. Yeah, I think sounds good. Yeah. Okay. Yeah. So we got about 30 minutes to the NY Open. Let's go to our daily. And before we do that, let's look at the news calendar. Just a second. Yeah, let's look at the news calendar. So nothing today as well, right? Just as we saw yesterday, nothing today. Tomorrow there is some news, and on Friday there is some news. But these news events are not important news events. Okay, I hope my sound is clear. So everything good? Yeah. So these are not important news events. But as I said yesterday, since Trump is in office, now these news events can also bring volume. Let's talk further on that topic. Um, yeah. Okay. So yesterday was a non-news day, right? And this is the daily time frame. So what's happened is price, just as we anticipated last week, um, we came for a third touch. There wasn't enough volume there because this was the original, this is the source, the drop and the base and the drop, right? The waterfall effect, the drop, base, drop, this one right here. That's exactly at 2715. There is kind of daily, there's weekly support right there, and price reacted once. So this weekly support, we created a daily supply zone right here, right? Right at that weekly support, we just crossed just under that. We created daily supply, and price came there once, price came there twice, price came there the third time, and there was not enough volume to push price down again. We pushed down to 2700, and then yesterday we started just above 2700 and we closed above, strong bullish candle, and we're pushing now. We're pushing, let's see if we're going to push further up to 2787, or are we going to get a reaction at 2750, because this is, there are wicks here. Now pay attention to these wicks. One rejection, second rejection, right? Let's see if you get a third rejection and price pushes down. Um, yeah, so it's around exactly where price is right now, around 2759, 2760. That's exactly where price is right now. So are we going to get a push down today, or are we going to continue and break through this high? So this high is 2762, let's say 2762. Are we going to break above 2762 and head another 270 pips to 2787 weekly resistance, right? So we're going to go to the 4-hour time frame and pay attention. Now, before we do that, this is Trump's first day in the office. Look at the volume. Look at the daily candle. It's a 427 pip candle, right? Look at all of these daily candles and look at that one daily candle there, right? So this is welcome to the Trump era. That's all I have to say. Welcome to the Trump era, because this is expected, right? So 2016, 2017, 2018, this is what I would see, right? Not every day, but regularly. you would have the daily candles would increase in size. Your average daily range would increase. So it would go from about uh, now we're around 250, we're between 250 and 300 pips, expected to go to 350, 400 pips, right? Even 450 pips per day, right? So anything between 350, above 350 might be your daily range, above 350, right? 350, 375, 400 pips a day, right? Just like we saw yesterday, we saw a plus 400 pip candle. Okay, let's go to our 4-hour chart. Now, before we do that, have a quick recap of what happened yesterday. Now, I had taken buys once, and then I had taken sells, right? So I had taken a buy somewhere on this 15-minute candle, and price did go up, and then it came back, and I quickly got out. As soon as we broke this low, I got out. I managed my risk, and then on the pullback, I took sells because I was anticipating price to push down, and it didn't. I closed it very quickly once we got there. I closed when as I saw, a bull candle forming. I closed everything. Now, after that, this candle, I did take one very small trade right here on the pullback, right, at 2728.9, right, and I held it to around, I think, 2740, I think, around 2739, yeah, 2739. That was about 100 pips with my stop under this. Now the reason I took that trade, even though it was a very risky trade, um, we had volume pushing up, right? The main idea yesterday's idea was that we have closed a bullish, almost like a bullish doji above 2700, which means we can push. If we push past 2715, then we're going to 2750. That was where we're heading, right? And even though we had these liquidity candles, the volume of that could be easily consumed. If there's a lot of bullish volume, we can consume that volume and head towards the next liquidity candle, which is exactly what price did, right? We went up to that. So I did take an entry. So once I think the stream ended somewhere here on this candle, I think the stream ended, and then when I had the pullback, I took it at 2728.9 because I looked for two M15 breaks. So I looked for my setup. So this M15 candle broke this low, and this candle broke this low. So those are the two most recent M15 low breaks. My fib is drawn from the to the lowest low and to the highest high in that range, or the most recent high to the lowest low, right? So that's the M15 candle, and this candle perfectly touched. In fact, this would have been the entry candle, but I entered it a little late. I entered it here. This would be the perfect entry. Stop loss under that candle, and for price to push up, right? Push through because the daily volume is on our side, right? To push straight up. Now, this is a very risky trade. The reason this is risky is if we did not come to the any of the liquidity levels. This didn't happen at a liquidity level, right? In the London session, or just after London session, or in the London session right here, and just after the London session, we grabbed liquidity from the EMAs. So apparently that liquidity was enough for price to push all the way up, right? It didn't need to come back again to the EMAs, right? So that's what happened in the London session. We grabbed enough liquidity from the EMAs, and we pushed up, and then we continue to push up. We did not come back for a retest of the EMS, right? So that happens sometimes, and that was, again, I'm repeating myself, it was a very risky trade. I risked I just took like one position and I let it ride until 2739. Is where I got out. And soon as it touched 2739, price pushed down. So I was happy that I got out there. But then later on, we continued higher, right? So we broke above the liquidity candle high, and then we went. Soon as we break above the liquidity candle, the next liquidity area is 2750, which is this, right? And that was another 65 pips away, and price eventually got there, and then it went further up, right? So we're trading further above it. Now let's get rid of all of this and start our analysis again. So there was no sells yesterday, right? On the M30 time frame, price did make a single candle there. It made resistance, but immediately the next candle went and broke the high. So there was no chance of getting on any sells. This high was not respected, right? So this candle closed at 1730. That's when this candle opened. If you go to the 15-minute chart and look at that candle, that's this candle, right? This is the candle where it opened. So soon as, even if you did take a sell here, right, on the retest, you would have got out at around with a 18 or 19 pip loss. That's it, 18, 19 pip loss, because your stop loss would have been above that. That was the more aggressive stop loss. When you have price trending very hard like this, it's better to go with aggressive stop loss than a more conservative stop loss above the liquidity candle, right? Because we have a pushing up very hard, right? So it's better to go with aggressive. So it's better to be wrong with a smaller risk than to be wrong on a with a larger risk, right? If you're ranging, it's fine to have your stop loss above the liquidity candle high. But if you're in a trending market where price doesn't even have to come to the EMAs here, in the New York session we didn't even pull back to the EMAs, we're just pushing straight up. In that case, it's always better to have your stop loss above the M30 high rather than the liquidity candle high. Okay. Okay. Mm, okay, let's start with our zones, right? Let's start with demand first. I think the demand levels are obvious. So let's start there. Okay, so that's a rally, a base, base, and another base. Three basing candles and a rally, right? So that's a leg in and three basing candles and a leg out, right? Now, the reason for this is because this candle has more body than it has collective wick, so that's the leg in. If you feel that it is not, then you can always bring your candle. You can bring the zone down here as well and consider this as the leg in. But to me, this would be the right base. Okay, these candles, because these three candles are all stacked next to each other, right? They're stacked. They're stacked next to each other, and these two candles at the two ends, it seems like the bookends, right? Okay. Um, the one below that, there's a zone here. We're gonna mark that as well. Okay, so that's a rally, two basin candles, and a rally. Okay, so these are the two zones that we have for now. I'm going to get rid of this supply. Yeah, broken above it, but one second. Let's just take a look at that area. Let's go on to the 1 hour time frame and see what it looks like. 30 minutes. Yeah, we've broken above it. Okay. But we've created resistance there, here, and prices closed above and close trying to close back in. Okay, so just have to be mindful of that. Let's just extend this here. Yeah. We haven't, we've closed back in. We've closed back inside. And that is, there is a drop there. There's a rally and a drop there. So on the M30, on the M15, you'll see possibly a zone there. But there is a clear drop there on the 1 hour, right? So I'm going to keep this candle. Um, I'm not going to completely get rid of it. I'll explain further. Just give me a second. Okay, so the original 4-hour zone was this, right? This was the original 4-hour zone, right? Price has gone through it, but has closed back inside it, right? Now, if a 4-hour candle had closed above it, I would have deleted it. No problem. It's out, right? But in the London session, the 4-hour candle broke it and then closed back inside. You can see that, right? If you look at the 1 hour, we broke it and we closed back inside. That's the London session. This candle right here, this 1 hour candle, right? We closed back inside. So I'm going to leave that and I'm going to bring the low of that base to this, to the open of this 1 hour candle. 58.14. The reason I'm doing that is because if this hadn't happened, there would have been a supply zone here, right? I would have considered a supply zone because you have a rally and a drop. Again, if it looks like supply, it is supply. So I'm going to keep the zone. Now we might break it, that's fine, but I'm going to keep the zone because we've closed back inside it. Okay, so we could push back down, grab liquidity, and then continue up. Okay, small these labels here. So I'm going to still label this as H4 supply, that as H4 demand. Okay. Let's put the correct values on this. This open is 49.04, close 4. Yeah, this low is 40. This open is 480, 660, 480, 660. Okay. It's about 300 pips to the downside. Let's extend this as well, just to be safe, in case we have a big drop for any reason. I'd drawn these zones yesterday, so I'm not going to redraw them, but these are the new zones for the day. Okay. Now let's look further up in terms of supply. Now we're coming to all-time highs again, right? Again, I've said this in my previous streams many times. Whenever price comes to all-time highs, I just really hate trading because there is no information, right? If you look at the daily, that's an all-time high. That's it. Above that, at that all-time high, there is very little price action because there's just a rally and a drop. And then above that, there is no price action. Zero price action because price has never been above this. Price has never traded above 2786, right? On the weekly, that's the high. 2790. Price has never traded. Gold has never traded historically has never traded above 2790. So that's an all-time high. And I really hate trading when price gets to all-time highs because there is no information on the chart. There is no zones. There's no past price action to draw anything off, right? And that's the reason I hate trading at all-time highs. But we might have to. It might be a case that we might have to. We might see all-time highs again this week or next week. Let's just save this. Okay. Okay, so that's that zone there. That's clear. So once price breaks this, that's where we should be heading up to. That's another 160 pip move up from this zone. Let's see if we can get there today. So let's just extend this to the right. And above that, we have 2800 as a as a liquidity level. Okay. Um, this is a high liquidity zone. We had mentioned it yesterday. Right. Now, done. Right. We've got our H4 supply. Our closest H4 supply, we got our closest H4 demand for the New York session. Now we are going to the next step where we identify which of these new zones that we drew, if they are high liquidity zones or not. Okay, so let's start with demand. Let's go to the 1 hour. Did this break anything to the left? This move up, we'll have to look left here, right? This was the move up before the pullback. This is as high as it went. 866. Let's just put a just look left. Yeah, so price broke above, obviously broke above all these highs, right? To get there, broke above these highs. There is a supply level right here as well. There is a drop, a base, and a drop. A drop, base, drop, and that's right at this high is 5038. 5038, right? Because that's a drop, two basin candles and a drop, right? So there's a zone here. From here to here is a zone, a 72 pip zone. Let's see, and price did break that. You can see, so that is that line 2750.38, and we did break that, right? So this is a high liquidity zone. Okay, the one below. Is this a high liquidity zone? Let's check on the 4 if it's obvious. Yes, we broke these highs, I think. Let's just go down to the 1 hour. Maybe it's clearer on the 1 hour. Yeah. So there was supply right here. We had a push up. Let me zoom in. We had a push up. We had a rally, and we have a sudden drop here. So there is supply up there, maybe on the 30-minute or the 15-minute. And this move up that started here took out that high there, or that supply, right? So this too is a high liquidity zone. I hope that's clear. Okay, so that's done. Now supply, let's see if this is still a high liquid. Now this did break, so it's no longer a high liquidity zone. It's not taken out any. So there is demand here. There's a rally, a base, and a rally, but price hasn't taken that out. This zone right here, right? There's a 30 pip zone there, rally, base, rally. This is a single basin candle. This move down hasn't taken that out, so this is not a high liquidity zone. Okay, that's it. So this is a high liquidity zone. That's a high liquidity zone. Just clean up the chart. Once you start doing this thing, you get used to doing this, it becomes a lot quicker. Things become a lot quicker. Right? Just save this. Your prep work becomes not only quicker, it gets quicker, and also you build confidence in your analysis or your prep work. Okay, price is at supply, right? But let's check here, demand. If price drops, where could it possibly grab liquidity? It could grab liquidity from the EMAs, right, which is right here. It could grab liquidity from 2750, which is a BRN, right? Or it could come to the high liquidity zone, right? So we're going to take a look at this high liquidity zone and look for a high liquidity candle. In case it doesn't get enough liquidity at the EMAs or at the BRN, if it comes here, we're going to take a look at and see here if there's a high liquidity candle where it can push price up. And the reason I do that is because these are the 5 areas that I believe that price looks for liquidity, right? in any of these 5 areas. Now there may be more. I'm not here to debate that. I'm just here to share the way I trade. So these are the 5 areas that I pay attention to on a price chart. So let's go to the 1 hour. Start from the 1 hour. Let's look for the largest candle in this area. This largest candle is right here. That's a 67 pip candle, and this one is a 60 pip candle. That's 65, yeah. So it would be this. High 996690. 912. 260. 12, Let's go down to 30-minute time frame. Yeah, that's 30 minute is still the largest candle. That's a 57 pip candle. You can bring it under that. This is smaller. Let's go down to the 15-minute maybe. No, not on the 15-minute. On 30-minute, I think that's the candle on the 30-minute. Okay, because on the 15-minute it's broken into two. And we have that candle. Then we also have that candle, 39 pip candle. So that's better. 336. Okay. So 3 areas of liquidity for price to grab liquidity from: EMAs, BRN, high liquidity candle. In case price drops further down, let's take a look at where price can now. I'm gonna relook at this zone here, right? Because there are wicks above here, and I'm gonna look at it on the 1 hour to see if maybe there's a 1 hour supply, 1 hour demand level here that I'm not, that this zone is not covering, right? So we're gonna just, yeah, yeah. I would consider all of these as basin candles from here to here. So that's 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Actually, 11 candles. 11 basin candles, right? Yeah. I would consider this all as the base. Bring the base up here. All of that. Because all these candles are stacked next to each other. So this is the leg in, and that's the leg out. And all these candles in between. On the 4, it just shows as wicks, but that I will need to include that in. On the 1, yeah, that's better. And so this open is 983. 983. Okay, NY session is just about to open, but we're going to wait for the first 15-minute candle to close. Not going to do anything until then. And let's look at this area. Let's see what's the largest candle. That's a large candle. It's 102 pips. That's a large candle, 78 and 80. So this candle right here, the 30-minute, 71. This candle right here. This candle right here. Let's go down to the 15-minute. Mm. No, 30-minute candle. Yeah, this one. 238,537. 238,537. Okay, cool, done. Here, we'll have to look further up. Price is breaking this high again. Just have to wait. Anyway, we're going to wait for the 15-minute candle to close. We want to see whether are we going to reject and push down again, or are we going to go straight through. Um, yeah. Okay. I'll consider buys if price pushes down here to this candle. I'll consider buys, but let's see. Because since we already broken the supply zone, so if price pulls back to this candle somewhere here, I'll consider taking buys. The stop loss under this candle, anticipating a push up to this zone here. It's about a 200 pip climb up. Okay, here there is no liquidity. This is not a high liquidity zone, and there is also no liquidity candle here. There is nothing, right? Except for this candle right here on the 15-minute. There is nothing. There is no bearish candle on the 1 hour. Just this one. This candle is outside the zone. 30-minute, these candles are all the same size. So on 15-minute, this is the only candle. But because there is bullish volume, we should easily break this high, and this high is just around the London, just inside the London session, this high. So we should break that comfortably. Okay, so let's go to the zone above and inspect that on the 1 hour. Let's just save this before we do that. There's that candle, which is outside the zone, but it's a 99 pip candle. That's that one right there, 167 pips. Go to the 30-minute, maybe. $80 pips. It's outside the zone. It's this candle right here. Aligns with this candle. Let's take a look on the 15-minute. Yeah, that's the largest candle, 15-minute candle. Yeah. Now price is broken above it, so let's see if it has volume to push price down. But that's the candle. 938,752. 752,938. And that candle aligns perfectly with this big candle right here. It covers that candle, so it's a smaller candle, but this is the right candle. It's a smaller candle in this range. So, okay, but very likely, it's very likely that we're looking at all-time highs again. We're heading towards 2800. It's about a 400 pip move. Very possible in a single day. Okay, now let's. We've got another about 10 minutes for this 15-minute candle to close. Let's kind of see what price has done so far since the day opened. Yeah. Um, so that's where the daily candle opened. Just zoom in. Right, this candle right here. This is the daily open. Price dropped down. That was just the open. That's fine. Then we pushed up here. This is the Asian low right here. Okay. Then price went up 15, ranged 530, 645. This would be the Asian high. That's better. That would be the Asian high. Because you can see the touch back to the Asian high right here. That's the Asian high right there. 52.91. Oops, what did I do? 52.91. And then this is the Asian low. 260. Okay, and then this is not the, this is the, yeah, this is the London. Yeah, so this is the London low. This is the London low right here. This would be the London high, even here. Yeah, it doesn't matter, this high or this high, it really doesn't matter. So that high is 63.41. This high is 62.30, 62.39, 63.41, 63.41. Okay, right. So this is what has happened. Price opened here, created the Asian low, pushed up, ranged, uh, went further up, created the Asian high, pulled back, closed above the Asian high, went back, went to that supply zone, and created that's a touch the supply zone that we had drawn in yesterday. Went deep into that supply zone, created a one and rejected, created this 1 hour candle to push down, tried to come back to the Asian low, couldn't, grabbed liquidity, pushed up, retested the Asian high, pushed back down, closed above the Asian high, continued up, made the London high, came back down and retested the Asian high, right? And is pushing back up towards the London high. That's what's happening. That's the story. Okay. So in the Asian high, a low Asian session, we've made price made about 100 pip move, and in the London session, price has made about a 170 pip move, right? So 100 pip in the Asian, 170 pip in the London session. Okay. Uh, Price has moved about 215 pips already. Let's see. So there should be quite a bit of volume left for the day. Let's see where the move is. Now, obviously, we are bullish on the high time frame, so we're looking for price to run to this liquidity candle, which is at around 2779, right? 2779. That's where we're anticipating price to run to 2779, or even further, right? To 2780, 2783, anywhere further inside this candle, right? As a move that I want to take, that is the kind of move that I want to take. I want to get in on this, but I'm not a breakout trader, so I'm not going to buy as price breaks this. I'm looking for that pullback confirmation and then a trade to go up and to ride that trade up all the way there. Okay, that's what I'm looking for. A low risk, high reward, high probability trade. Now the probability is high if price pulls back to the EMAs or at least to this liquidity candle, right? This candle here is a liquidity candle because it's grabbed liquidity very close to the EMAs, hasn't touched it, but very close to it. And that's the Asian high. So if it's come, tap there, when you see a wick like this that is larger than the previous candles, the previous few candles, then you know that that's a liquidity grab, right? Very close to the EMAs, but hasn't touched it, missed it by about 6-7 pips. Now this candle is inside the pre-NY session. So this candle has broken this low and this candle has broken this low. Okay. So yeah, so this low is 361, this low is 376. So what I would do is now we've broken. Now again, this is trades like this are risky, um, but I would take them. The reason I'm considering them is because price has already broken this supply zone, right? And it could come to retest it and continue higher because we're anticipating a move up. But I want to pull back first. I want to see price pull back to this candle, somewhere in the middle of this candle, to take a trade because this kind of risk is too much. 72 pips is too much. So I want to see a pullback and then to see price move up. Okay, so but I'm going to mark this candle as that liquidity candle and watch for price to come grab liquidity off that candle and then push up. If I do take a trade, stop loss would be under this candle. Let's look on 30-minute. Yeah, that looks fine. Yeah, on the 1 hour it's clearly a liquidity grab. Clearly a liquidity grab on the 1 hour, right? That candle right there. So I want to see price come down a bit and then head up. So 825 181, 825 182 181. Okay. Okay. So now, in case price is pulling back for sells, I would not take sells. Even if I see a setup that I like, I'll not take sells because we're very, very bullish. Look at yesterday's daily candle, right? Look at this. This is the previous day, clear rejection of 2700. Even though it looks like a doji, that's a clear rejection of 2700. You see price forming daily support right there, just above 2700. And then you have a strong bullish candle close above 2715. So we're very bullish. So even if I do see a sell setup, might just not take it because I want to look for buys. Okay. Would like to see price come somewhere here, maybe break this M15 low and then take a trade. If it breaks below this low here, that'll be great. This low is 577, 577. Yeah, we should break this low. The price should come down. Should come down. Yeah, so all price is doing is it's grabbing liquidity from this candle, 5-minute candle, this large candle here, the price created, that's a 31 pip candle. It's grabbing liquidity from that to push down, but that's on a smaller time frame, on the 5-minute. But we are looking at the high time frame trend, which is the daily and the 4 hours is pushing up. So if you look at the 4 hours, we can see price has created a demand level, has also created 4 hour support. and closed above 2750. So we're looking for that move up. We're looking for price to grab that liquid. It already has grab liquidity. We want to get in. We want price to pull back a little bit, get in, and then come fill this 4-hour wick and then continue higher. All right, that's what I'm looking for. Because if you go on to the 1 hour and look left, yeah, there is nothing. Just clean space. Look at the 30-minute. Yeah, there's nothing. All the way up to here. Good 120 pips, 125 pips. Even, yeah, up to these wicks here. There's a 110 pip move up. There's nothing, right? That's the move that I want to catch. But I want price to come further down. Yeah, we should break this. Okay, so the new 50-minute candle's over. We should break this low pretty easily. Price should come down and break this low. Let's see where it can come to. Possibly here. Possibly here. 57.19. 57.19. And here. 55.15. Yeah. So what I'm going to do is I'm going to place a pending order here, anticipating a push up. Okay. I'm going to place a pending order here as well. 15. Yeah, that's good. So 1275515, 275719, and stop loss would be under 2751.8, right? Just under this liquidity grab. Yeah, seems okay. We should come down, push down. So stop loss would be under this, low 51.81. Yeah, we're breaking this low. We should easily break this low and come down. Yeah, on the 15-minute is also clean space all the way up. On the 5-minute, yeah. Yeah, good. We broke below this low, but we didn't come further down. Didn't come to this entry, but we broke below the low as anticipated. This is the candle. This is the candle that I've got my eyes on. This candle right here, right? That's a part of that 1 hour liquidity grab. I want to see price come down. I don't want to take an entry up here. It's too far. I want to see price come to this. If it doesn't, that's fine. If it doesn't come to that 275719 or 2755.5 to these areas, that's fine. If it decides to go without me, that's absolutely okay, right? You don't need to chase price. You just need to be patient. Got your entries, because to me what's important is about managing risk. That's the most important. That's one of the most important things for me, right? And that all ties into low risk, high reward trading, right? So I don't want to take a trade with a 80, 90 pip stop loss. I want to get it 50 pips or under. So I want price to come down. If it doesn't, if there's enough, it's already grabbed enough liquidity and price heads up and I miss out on the trade, that's absolutely fine. If it comes and if I get in, that's great. But if it comes further down, then I'm going to find a way to manage risk. It's all about managing risk. Okay, right. So trades are in place. Um, yeah, trades are in place. Yeah, there is no bottom wick. We should come down further. We should come here, and we should even come lower down, lower. Um, yeah, we're coming down. Okay, so I'll be got about 7.5 minutes for this candle to close. There we go. Coming down. Close 674. Open 719. Low 732. Ooh, tapped, not tapped. Yeah, tapped. Should come further down. Let's see. We're gonna have an entry here as well, just under the, yeah, under this candle here. 55.77, 70. Right. 75 and maybe one other sniper level if we come there. 42. Okay. Let's see. See what price does. If it comes down now, how am I going to manage risk on this is if there is a 30-minute close. Let's see how the 30-minute candle closes. Got about 5 minutes, 5.5 minutes, 30-minute candle to close. Let's see. Let's see how the 30-minute candle closes. Yeah, let's see how the 30-minute candle closes here. 30-minute closes in 3 minutes. The next one could come even lower and break this low. That's the worry. If it does, here's what I'm going to do. Here's how I'm going to manage risk. If the next candle, this candle is going to close in a couple of minutes, right? Here's how I'm going to manage risk. If price comes and breaks this candle low, if the next candle comes and breaks the low, then I'll close. I'll close maybe all of my positions, or I'll close maybe the top, these ones that are open, and leave the pending order, right? I might do that. If it breaks the low, which is very likely to happen, it's going to break the low. So that's how I'm going to manage risk. It's very important to know how you're going to manage risk, to visualize what's going to happen, because this is closing a bearish candle. The next one breaks the low, we're coming straight down, right? So there's no need to hold trade. So that at that point I'm going to close. If it breaks the low, this candle low, then I'm going to close all these open orders, or at least two out of the three, because it's very important to have a plan of managing risk so that you lose less than what you had initially planned to lose. So this low is 54.54. Let's see. 44. 40 seconds more. No bottom wick. Candle closed with no bottom wick. Interesting. 75. No bottom wick. We're coming straight down. 30-minute close with no bottom wick. So no bottom wick means there is no range for the next candle to trade in, right? That's what it means. There is no bottom wick or no top wick. So this candle created no bottom wick for price to trade into that range. There is no bottom wick, unlike this candle, right? But so there's a 50% chance that price can go down. There's a 50% chance that price can go up. It's a 50-50 chance when there is no top wick or bottom wick, okay? But we are pushing down from this supply level because price closed above. I mean, price broke above and closed inside it. So we are pushing down. We've retested that area and we're pushing down. So we could come and break the low, but I'm going to wait. I'm going to wait for, maybe I'll have to hold my trade until this low breaks, because if this had closed with a bottom wick, I would have closed the trades immediately. But now there's a 50% chance the price could go up. Could. Um, Instead of going, even though there is a M30 resistance formed, it could push up, but seems like it's coming down. So yeah, maybe you need to manage risk on this. Yeah, we are coming down, I think. Close a small candle, a 5-minute bearish candle, then we're coming down. Yeah, I'm going to wait for this 5-minute candle to close. If we close a small bearish candle, then we're coming down. It needs to close a small bearish candle. Yeah. Yeah, we're coming down. That's a candle close. Yeah, close two positions, and that's how you manage risk. So you don't. I saved 12 pips. Maybe close this one also. Yeah. Yeah, closed everything. Closed everything. So we've touched the EMA. So we're going to wait now. Wait for the 15-minute candle to close. Be patient and just wait. We gave it a try on this candle here. So price, let's see if it closes below the Asian low. If you have a 15-minute candle close below the Asian low, likely that we're coming down. But let's see if you have a 15-minute close below the Asian low or not. That is under this line, right? but we've tapped the EMA. So let's see, we've got to wait for the 15-minute candle to close now. Okay, there's nothing to do. We've tapped the first level of liquidity, which is the EMA. The next one is 2750, and the next one is the liquidity candle. Okay, so let's just be patient, wait 8.5 minutes for the candle to close. I'll be back in a few minutes. Okay, what's happening? 3 minutes more. 15-minute candle closing bearish. Um, Seems like we're coming down. Yeah, that's the candle right there. 31, 15, come 50% of the way into it. Mm. Could be coming down to create a bigger bottom wick. It's possible. That's possible. Let's see. Let's wait for the candle to close. Formed M30 resistance. Up into this. Yeah, we could be coming down. Could be coming down. It'd be okay to take sells here. If price can get up here, '63 at least here. Get to 30. 2757. 2757. Where's 2757? If you can come here, this might be worth taking sells. Yeah, we're pushing down. We've created M30 resistance here. broke above supply, closed back inside, retested, NY open, retested that candle, and is pushing down and created M30 resistance. Yeah, it could break below these lows, come further down. That's about a 80 to 90 pip, 100 pip drop from here. Rejected the Asian high. It's tricky. Price action is not clean. This. Yeah. It's grab liquidity, but that's a doji. Broken below the 1 hour low. We can continue down. Let's maybe wait for this 1 hour candle to close. Wait for the 1 hour candle to close and maybe on the retest, take the trade coming down. Yeah, so wait another 11 minutes. Wait for the candle to close. When this 15-minute candle closes, that will also be the close of the 1 hour candle. Just wait for that 1 hour candle to close. And then price should pull back to create a top wick and then maybe take a sell to come down here. Stops above that, above this candle high, 1 hour candle high. Yeah, let's just wait, patiently wait for the 1 hour to close. So we broke above the high here. Came back, broke again, closed inside, retested, dropped down to the EMA. Yeah, we could come down. Could come down. It's rejecting this wick here. If it comes down, that means it's rejecting these wicks here on the daily. This wick here, right here. It's rejecting that wick. Okay, let's take one sell there, a small position. This candle right here, 15-minute candle, 64 pips. It's a 42 pip candle, and that's a 31 pip candle. I'll put my stop loss above this high, just to be safe. But we'll manage risk if price goes deeper and breaks this high maybe. 341.6 minutes. Let's see how this 1 hour candle closes. It's pushing down. Yeah, so this is my second chance try for the day, and that's it. If this trade also ends up as a loss, then that's it. It's two tries a day, nothing more than that. So these sells are based off, there is a liquidity candle here, price came, reacted. So before the liquidity candle, what happened was price broke above the supply zone, crossed it, came back, crossed it again, closed inside again. So broke above, closed inside. This is the London session, so that's a high volume session. It happened inside, that's why it's important, because it happened inside a high volume session, closed inside, created a liquidity candle, dropped, came back, retested that liquidity candle, and now is it coming down? This price pushing down to create a bottom wick on the daily, because this wick may be not enough for price to push up, so maybe needs to come further down to grab liquidity. So let's see. Yeah. Let's see if we can push here. And how I'll manage risk on this is, if we break the M15 high, I close everything. So I'm not going to obviously wait for price to get up there. But if you break the M15 high, I close everything. Right? That's how I'm going to manage risk. If price breaks the M15, this M15 candle high, I close these trades here. Might open one, another trade up here, but if you break this high, then I close these trades. So 3 minutes more for the 1 hour candle. Let's see how this 1 hour candle closes. It all depends on the 1 hour. If this 1 hour candle closes bullish, then I'm closing everything, because that means we've broken the high, came back, broke the low, and we closed back bullish. So we are pushing up. We've grabbed liquidity and we're pushing up. So then I'm going to close everything. So let's just wait, watch how the 1 hour candle is going to close. If it closes bullish, I'm closing everything, regardless of it breaking the M15 high or not, right? Regardless of price breaking this M15 high or not. If the 1 hour closes bullish, then I'm closing everything, because the chances are higher that we've created a doji, a bullish doji, and we're pushing up. So then we close everything. If it closes bearish, then the 1 hour has created resistance as well, maybe to push down. We've got to wait and see. Just patience. 2 minutes more, and we'll decide if I'm going to keep this. But it's all about managing risk, because you will have days like this. You'll have losing days. It's all about applying the same logic and managing risk, right? The same logic that you would apply every day, regardless of winning or losing, regardless of the fact. But the same logic. And the logic that I use is based purely on price action, right? Because if this 1 hour candle closes bullish, that means it's closing above this candle close, right? We're closing above it. So we've grabbed liquidity from below, closing above. The next one is very likely to go and break that 1 hour high and continue up. So there's no need to be in drawdown. As soon as this closes bullish, close the trade, because that's very likely to happen. It may or may not happen. I mean, price could come down, but the chances are higher once this candle closes bullish. There's a higher chance of price moving up than moving down. That's how you weigh the probabilities, right? Either for you or against you. So if this closes bullish, the chances are that price, the 1 hour has closed bullish, has rejected this area, the Asian high, and is closing bullish and could continue higher. So then there's no reason to wait to hold the trade in another 40, 50 pip drawdown. Just take a 15 to 20 to 15, 15 to 20 pip loss and close your trade, right? That's far better than losing 50 or 60 pips. It's 1/4 of what you would want to lose, and that's how you manage risk. 25 seconds, let's see. Are we going to close bullish here? Finger on the trigger. No, we closed bearish. All right, let's look at the 30-minute. We have a bullish candle here. Interesting. Interesting. Probably have to wait for this M15 high to break now to manage risk. This high will need to be broken. 60.13. 60.13. Yeah. Once this high breaks, yes, then it makes sense, because the 1 hour has closed a doji, bearish doji, which means there's no information on that candle. There's nothing. So price can go up, 50% chance can go up or can go down, right? So we'll have to now wait for a bit more confirmation to close the trade. We should come up, should come and tap into 2759 or 2760. If price gets to all-time highs this week, there'll be very little to do until price starts building structure again on the daily time frame. Because once we get here, once we get up here, then that's it. There's no information to the left. There's nothing to do. Here, there's always structure. When price is moving up, there's structure. So there's something to draw, something to look for, something to analyze. But once we go above this and get here to 2787, then there is no information on the left. That is where we're heading. We want to see another 15-minute candle close bearish. We want to see a 15-minute candle close bearish to confirm that we're pushing down here to the possibly here and then here to the EMA, to the next EMA here. This would have been a better entry here, 2758.21. Yeah. Let's see. Got 10 minutes. I had to wait for 10 minutes. So 15-minute candle to close. Now, if the 15-minute candle closes bullish, that means the next one is going to break the higher and continue higher. Then I'm going to close one of these positions, right? So with not with every candle, but when price action starts to form, right? Especially when prices are going against you, when it's going against you, and when you start seeing price action form that confirms the price is continuing to go against you, then you need to manage risk, right? So if the 15-minute candle closes bullish, or if the next one breaks the high, then I will close. Maybe both positions or one of them. The whole point is not to lose your entire risk, right, that you've taken up here, right up here or here. To lose less than that. That's the game. If you lose less than what you had planned, so if you plan to lose, let's say, 60 pips on a trade, and you can lose, let's say, 30 pips out of that 60, instead of losing the full 60, you lose only 30, then your winning trade has less. It has less to do. It doesn't have to do much to recover that loss. It can recover the loss quicker. You don't have to have a multiple winning trades to recover one loss. You could recover a loss in the very next trade. Similar to what I did yesterday. I took 2 losses on stream, but they were managed. So I lost like 15 pips. I think my risk was like 50 pips, and I lost about 15 to 20 pips on the positions that I took. 15 pips, 20 pips each. So I didn't lose the full 50 on both trades. I took a buy and a sell, and they both lost. But I had initially risked 50, 55, maybe even 60 pips, but I'd cut it down to like 20 pips, 15, 20 pips. I got out. So when I had a winning trade, one winning trade recovered both losses and also got me some gains, right? That's that's how you should think. We're still coming up. We're still pushing up. This is probably creating a bottom wick to go up. We don't have a clear rejection yet, so probably still pushing up. Maybe come down to this candle and then push up. This candle right here. Yeah, we're still creating a bottom wick to go up. Candles have to close. That's how you understand price action. Got to wait for candles to close. Like right now, I'm waiting for this 15-minute candle to close. So once the 15-minute candle closes, and if it closes bullish, a bullish 15-minute close, it's got another 6 minutes for it to close. It could always go up and close bullish. If it does, then I'm closing trades, because then it's it's because price, that means it's pushing up. It's created a bottom wick already, and the next one is going to break the high and continue high, right? Because it's already created the bottom wick. Because if this candle comes up here and closes, you'll have a big wick at the bottom, right? That's how you need to visualize it. You have a big wick at the bottom, and what that means is the candle has grabbed liquidity, closed bullish, and for the next one to continue higher. So there's no reason to hold these trades then, because if it continues high, that means we're going further up. Why hold drawdown when you know that it's heading towards your stop loss? Close the trades, right? If it's to come down again later on, there'll be another opportunity to enter for sure. So you got to be patient. Yeah, seems like we're creating a bottom wick and we're heading up. We're pushing up now. Probably done creating the bottom wick. Let's look at the 1 minute. Yeah, looks like it. We're pushing up. You gotta wait for the 15-minute to close. Can't do anything until this candle closes. Mm-hmm. 2.5 minutes. Let's wait. It's coming down. We've come to that. Yeah, this 1 minute candle, is it? No, not yet. Still push. Let's see. It's creating a bottom. It's just not doing anything. There's no. This is. We're getting close to NYSE open. So NYSE open. So we're probably just ranging right now. Volume will very likely come in after NYSE open. What happened yesterday? Yeah. Volume came in after NYSE open. That's the volume. 100 pip move up. Volume came in after NYSE open. So we'll probably wait for NYSE open. So another 15 minutes for the NYSE open. Okay, 15-minute candle is closing bearish. Um, I'm gonna take another sell here. Yeah. And get out here on this sell. 2750. We tapped into that candle. This candle. Tapped into it. As high as 5840. did I do? Hmm. Yeah, 10 minutes more for NYSE Open. It's taking a while today. It's slow. Hmm. Okay, let's see if we can get to 2750, right? We've grabbed liquidity from the EMA. The first one, obviously, that wasn't enough. That's why price created M15 bearish candle, created resistance on the M15 time frame and is pushing down because that wasn't enough. So let's see if we can continue down to 2750. That's where I have my TP level set at 2750 for this one, and this one further down at the liquidity candle, and then the one above further down at the London low. All right, let's see if we can get all the way down there, or are we going to react here and push up? We'll have to watch and see. Now, there's nothing, there's no price action right now. We're just ranging. We've created a bull candle, created a bear candle, gone back up, come back down. We're just ranging. Candles are just closing side by side. If you look at the 1 hour, we're just in a range. All of these candles are in a single range. 1, 2, 3, 4, 5, 6, 6 candles. The last 6 hours, you've just been closing side by side, right, in a range. So the whole idea is this a reversal here to push down, to grab liquidity from further down? If it is, I'm going to hold a runner. I'm going to let this run because, like you saw yesterday, price does run. You got to keep a runner, right? We've got into a um, different time in the markets right now. a different time in the markets where your runners can get you those big gains. But I don't know right now. I don't know if this is a reversal or if it's just going to range and then go up. There is nothing. We're just closing side by side. Candles are just closing side by side. 6 minutes for the 50-minute candle to close. Let's see. That should close a 30-minute candle. Let's see if we can close below the Asian high. 645. Yeah, if you can close below this Asian high, that's a little bit more. If you can close below this Asian high, that's a little bit more below this line here, below 2753 basically. If you can close below 2753, then that's a little more confirmation that we're heading to 2750 and maybe lower to 2746. But it needs to close below this Asian low for some sort of confirmation that we're heading down. Right now we're just ranging, we're just sideways. It's nothing, no price action. The 1 hour closed a doji. The previous one a bullish candle, but still no top wick. So this one pushed down. "35 minutes to the 4-hour candle close." How long have I been here? Okay, yeah, 5 minutes, almost 2 hours. Okay, so here's what I'm going to do. I'm going to end the stream in about 5-6 minutes. Let this trade run. If price comes back up, breaks this M15 high, I will close this position. If it comes back up and breaks this M15 high, I'll close both positions, call it a day, right? So if again, I'm in sells, if price comes back and breaks this M15 high, which is 275840, I'll close this one. If price comes back and breaks this high, 276013, I'll close both these positions, call it a day. If you are looking to take buys, I would advise to wait for buys down here, right? Maybe wait for M30 support to form, because price is pushing down. Even though it seems like a trend trade, we're just ranging right now with nothing. When price is ranging, it's always better to wait for a higher time frame confirmation to take a trade in the direction that you're anticipating price to go. Wait for that high time frame confirmation. And if you're a session trader, that high time frame confirmation could be on the M30. That's a very good time frame to wait on, right? So wait for maybe M30 support to form and then a trade to go up, but maybe M30 around 2750 or the liquidity candle somewhere there, right? Closer to the demand zone. Wait for that and then a trade to go up. And then again, if you're taking a trade, if you get price does come here, you get a M30 support form and you take a trade, stop loss can go under the liquidity candle, or it can go under the Asian low, which is this candle here, under 2742.60, right? You can put your stop loss under that. That's a safer stop loss, or put it under the M30 candle low that created support. That's a little more aggressive stop loss, right? And your TP levels would be around 2760, right? That's where you're looking to take out your TPs, around 2760, and then further up around 2760, 2763, and then further up here at around 2777. So 2760, 2763, 2777, right? Those are your TP levels for buys from down here. So again, we'll come back tomorrow and see what those buys played out, right? That's what I kind of do. So I give out a setup, then we come back the next day and do a recap and see if that played out, right? So yeah, I'll end the stream in a couple of minutes. Nothing's happening. It's really boring. Candles are just closing side by side with no direction at all. Volume may come in the next couple of hours, right? So just like yesterday, we might get volume after NYSE session. So you probably have to be patient and wait if you want to take a trade. Sells, um, you can take a sell, but nothing's really happening. There's no clear direction. So if you're taking a sell, just like I have taken, you can take a sell now, but your stop loss would need to be go above that candle there. That's a more aggressive stop loss. The safer stop loss is above the liquidity candle that we identified on the 5-minute. That's a liquidity candle right there. That candle right there. Above that is a safer stop loss. But right now there is nothing happening. We don't know if price is going down or up because we're just ranging, right? Just a candle coming down, candle going up, a candle coming down, a candle going up. There is nothing, no information at all on the chart. The one, the 30-minute seems to be closing bearish, but with a big wick at the bottom. Nothing really to go by. We're probably forming M30 resistance again here. So we form M30 resistance here, maybe forming M30 resistance again here. I don't know if we're going to break that high and continue higher, or since M30 resistance is forming here, we're going to continue down. I don't know, because we're just closing candles in a range with no information. At least as of now, there is no information. There is no clear direction. Okay, so that's the end of the stream. Yeah, I've been here just over just 2 hours. Wait for the candle close. As I said, if price comes up, breaks this high, I'm closing this position. If it comes up and breaks this high, I'm closing the other two positions, right? That's how I'm going to manage risk on this trade. So obviously, I'm going to lose less, about 40 pips there, about, yeah, less than that risk that I'd taken up there. All right. See you guys tomorrow, 7:30 a.m. EST. We'll be back to do our prep work analysis and see if there are any opportunities for the day. All right, take care, guys. See you tomorrow.